Today's topic, a retail mania in stocks and Fed yield curve control. Both kind of a stock and bond mix here. Highlights, a full-blown retail stock mania among retail investors is underway. I think there's no doubt at this point what we're experiencing is one of the greatest retail surges that we've ever seen. The national pastime with sports being locked down and the like is definitely retail purchases of stocks, and it's in a much different way than people think as well. And I'll leave that as a tease, and I'll get into that in just a moment. For now, the stock market's retracement still looks like a bear market rally. I would remind you that in the history of the stock market, we have never not had a bear market rally. We have never had top to bottom 6 weeks, 8 weeks, straight down, that's it, all over, and then a multi-year bull market begins. That's never happened. There's always been a bear market rally in the middle of it, and I still think that this is a bear market rally. FANG stocks with Microsoft dominance is something we have not seen in the stock market in 45 years. When I get there, I'll talk about it. 23% of the S&P 500 is 6 stocks. You have to go back to 1975 to find any kind of a comparator to that kind of a concentration of the market in a handful of stocks. Bank and bonds are relatively struggling. This gets to the retail thing as well too. Retail doesn't really care about banks. They don't really care about high yield. So they're not really moving at the extent that the stock market is too. And then on the yield curve control, for now the Fed is buying over $1 trillion of treasuries, more than the Treasury is issuing. Volatility is down. The Fed is doing de facto yield curve control. I'll talk about that when we get there and give you some explanations of what's happened in Japan as well too. And an 85% economy is a depression. I'll just tease that with a couple of statistics right now. Macy's is saying that their sales productivity, what they're selling in the stores that they've opened, is 50% of what it was pre-virus. And same store sales at Starbucks on open stores is running 60 to 65%. And then my whipping boy for this one is Ross Gerber, who was saying, look, we're going to get back to 85% of where we were fairly soon. Ross, that's the Great Depression if you get back to 85%. We got to get back to 98%, 99% of where we were. I think this is the biggest misunderstanding. People out there, good news, we're going to be back at 80% of where we were. That's the Great Depression. We got to be back at 99 in order to be something different. Remember, I will remind you that at the bottom of 2008, we were at 96% of the output that we were at the top. 4%. It's all it took to have the stock market and produce 10% unemployment. So that's why I'm saying we got to get back to 98, 99% to just have a garden variety recession. I'll talk about that at the end. Okay, retail mania. I think there's 3 things driving the retail mania right now. The first one, the first one is the public has taken FOMO, fear of missing out, and TINA. There is no alternative to the next level. Let me stop there. I keep hearing people talk about FOMO and TINA as if they have to convince people that that is the way to invest. No, that is full blown. That is full blown. Everybody does think that FOMO and TINA is the driving force that gets them up in the morning and gives them their existence right now. Beyond chasing momentum, which is traditionally the case, everybody loves to chase momentum stocks, they are embracing collapsing stocks like never before. There is a public attitude right now, and I do think that the Fed might have something to do with this, that when I'm on my Robinhood app or I'm on my Schwab app, I am looking now at the biggest loser list. What sector, what stocks are in free fall? And I must buy those because they always turn around and they go up. And that strategy has not been wrong because they either are overdone on the downside, or somebody with a printing press, I think you know what I'm talking about, comes in and makes sure that they go up as well too. That includes the market itself. And I'll show you some charts. The next set of charts, just a quick tease, is in March and April, we had the biggest account surge opening ever. The public doesn't know how to short stocks. The public is not interested in shorting stocks, but they wake up and they say, the stock market's down 1,000 points yesterday. It's down 1,000 points today. Everybody thinks the world's ending. I have to open a brokerage account. That is their, because it's FOMO and TINA.